Interesting times. Another day of free fall continues with Bitcoin breaking below $30,000. Is this the market bottom? Is there a lot more pain to come? Well, today we are blessed to have our special guest, Paul from DeFinity, who has 30 years of price reading experience and looking at the charts, seeing what the prices are telling us based on people's behavior. And I can't think of a better day to have him here. Really excited to have today's episode. Now, welcome to the Crypto Rain channel. I am your host, Jay Rain. If you do like money in crypto and you're looking for a real investor's take on the crypto market, you can join the Rainmaker family by liking this video and subscribing with the all notifications bell enabled. Special note, neither Paul nor I are financial advisors. I'm a crypto investor myself. Paul invests in many, many things. We share with you how we think about the crypto market, specific cryptos that I like, as well as we do take your crypto projects that you want us to look at. So if you have some suggestions, put them in the comments below, not in the chat off to the right, but in the comments below. Special note, I do own a lot of what I talk about on this channel, and special thanks to our Patreon members. We do have a private Discord that our Patreon members get access to. All right, make it rain on that like button. Strap in for the show. Let's welcome Paul from DeFinity. Paul,
hey guys,
good to have you on.
It's great to be here as always. It's a difficult market at the moment, but nothing we haven't seen before. So yeah, I'm looking forward to getting into what's behind these big moves.
Yes, it's nothing that you and I haven't seen before. A lot of the audience is new, or a lot of the crypto audience, at least a lot of the ones that I've spoken to, started somewhere between 3 months ago to a few go back a couple of years, like 2 years or a year and a half. But I've definitely been on this ride before, and it happens in this market once in a while.
Yeah, absolutely. I mean, what we've seen here is obviously a very sharp move to the downside, and it's come at a time when everything else is moving down. It's not just crypto assets, it's the stock market. The bond yields are continuing to move higher. We've talked about that, and we've talked about how the dollar has played into all of this, and those trends haven't turned around yet. So if it was just crypto on its own, I think it would be a greater problem. But because it's a fear move, similar to the beginning of the coronavirus, when you may remember oil went negative and people didn't want it. You couldn't give it away. And look at it now, like everybody's desperate for oil. So
remember that.
So just think about that as the market is going down. I know it's not very nice, and I know positions are in loss making, but just remember how things can turn around. So what we're doing is looking at the signs to say that the market has turned and will move into the next bull phase, which I still believe will happen. The scenario that's going on now wasn't our central case, but it was a case that we had thought about and thought was possible. And that's the thing about technical analysis. You have a central case where you believe that what the market's going to do, and then you have a case, what happens if you're wrong. So this is what happens when you're wrong. If it breaks this level, the market goes down, you've got to exit your positions, look for stability, look for the next major support level. And there'll be a few reasons why one might buy into a move like this. One might be that you see a reversal pattern, and i.e. signs that the market have stabilized, and we'll talk about that. The second one might be that the market is testing a really important or major level. So I think those are the two things to focus on. If it's to try and recoup losses, that is one of the worst reasons to do it, because everything should be thought out and structured. And if you happen to really like a crypto asset and you think that it's being thrown out with the bathwater, to coin the phrase, if it's a really good project and everybody's just scared, it's the equivalent of what they do in value investing, where stocks get pushed downwards, even though they're really good stocks, but there's a lot of fear out there. And so those are the projects that are worth looking at for stability, because investors will be waiting in the wings to buy those at what are bargain basement prices. Now, because I only use technical analysis, and I don't know what the fundamentals are, I don't know what those projects will be, but hopefully I will be able to see in the charts that the investors are moving back into those projects that are highly favored.
Yeah, everything does get put out with the bathwater, right? That's why we see everything dumping. If you look at your portfolios today, like, or you just look at coin market cap, almost every single thing is down. And that sometimes happens, and it does create a period of amazing pickups. I remember when this last happened in July and everything was down, it didn't have this sharp fall off. For the sharper fall off, I have to look back to March of 2020. But last July, everything had come down, not so sharply, but steadily down. And I was able to pick Luna up at $6, which had previously been $24. And then it went all the way up to like 110. And now it's come back down considerably from there, much as everything has. And so there are a lot of good pickups that are out there. I mean, last July, if you look at the market, almost everything was super cheap. Also, a better time to look at is March 2020, when really it was there were some major fears that the U.S. economy and the world economies were going to fail because of the shutdowns related to coronavirus. Well, they didn't fail. And so, but there was a lot of panic and everything got dumped. Bitcoin went from, it had previously just been at like 10,500, dumped all the way down to 3,800. So if you think about it, that was over a 62% move over the period of about a week and a half. And that's a huge move downwards. And then it steadily climbed and hit 65,000 like in a year from there. So, which is about almost 20x. So these kind of things happen. And my contrarian approach tells me that when everybody's running for the door, well, that's exactly like staying inside is exactly the place to be. And when everyone's wanting to come in, that's when I start looking at the door and saying, So it's as simple as that, really. Just find out what 95% of people are doing and do the opposite, and it works out exceptionally well. It's not perfect, but it works out exceptionally well.
Yeah, sometimes the timing can be difficult because, of course, at the bottom of the market, everyone has to hate it and it has to feel difficult to buy. That's by its very nature what the bottom of the market is like. So you remember the 20,000 move, and then from there it collapsed to 4,000. And again, everybody said crypto was dead. And here we are at 30,000, and everyone's saying, oh, it's finished. And if you'd gone back sort of 10 years and said, well, Bitcoin's going to be at $30,000 and everyone's going to say it's over, you'd be thinking, well, that doesn't make any sense. I mean, I'm not saying it can't go any lower, but these are the it's not quite right, is it? Because it's actually, above lows from last year anyway. So it hasn't broken very significant lows. It's broken some important lows, which is why it's gone down in an air pocket. But there's some even bigger levels that are just below where we are now in Bitcoin. And if these hold, it will be a major signal going forward. So, let's hope they hold. If it goes down a bit more, then yeah, okay, we're going to see an extended correction. If it breaks that level at 28,500, which I can show you on the chart.
Yeah, why don't we pull up that chart?
Yeah. So this is the purple line. It's a really important level, 28,500. So I mean, going back to what we looked at last week, this was let me just correct that. This was the trend line that we were looking at for a bounce. So it had a bounce off it and then it broke. And then it went to the next blue line, which was where we should have seen support, but it didn't. And then that was where the selling happened below 35,000. Because that didn't hold, that's what caused this downdraft. Now, in order to shake out all the bulls, this is what the market does. It has really sharp moves to the downside, makes everybody panic, and then they exit their positions. So the question is this panic over? It's still a bit too early to say. I wouldn't want to step in because the upside is going to be so big when it happens. I don't think I need to worry about, say, 2,000 to 5,000 points down here when we're going to be looking at sort of over 100,000 when it eventually rallies. So this 28,500 level could mark a low. It bounced from it. It bounced ahead of it, but it's still a little bit too early to call it. but I'd like to see this hold. If we're still talking about it being above this level in the next 2 or 3 weeks, then the longer it stays above it, the greater the chance we've seen a low. If it does take that out, I want to see how it takes it out and whether it's a really aggressive move, another sort of panic, and then we will look for a Fibonacci level or some other form of support to mark the low. There are some on the downside, but I'm not going to talk about them until they come to fruition, i.e. it breaks this level. So there's a plan there, and I'm going to sit on the sidelines until it becomes clearer, and I think that might be a sensible thing to do. I don't mind leaving a little bit on the table on the downside to know that we have got a bit more security about getting into the market.
Yeah, one of the interesting things about having been in the space is every time it hit a bottom, and back here when it was bouncing around, if we keep that chart up, when it was bouncing around 30,000 before, that's way back in July of last year, and realized when it was there were many people saying it was going to keep going down to 20,000.
Yeah.
And 12,000, and 12,000 is going to be the bottom. And so when you look at that and you're like, oh man, I wish I could have timed the exact bottom. And this is why it's hard to time the exact bottom, because honestly, a whole bunch of people at the time were saying, oh, it's going to keep going down to 22, or it's going to go down to 12 and blah, blah, blah. We had our market top in March is what they were saying. And now it's just going to go and keep going down, and we're entering the bear market. And what happened? That was the bottom, and it went up and it broke a new all-time high. And we're back to that situation that we were in July, right? Oh my gosh, it's going down and it's going to go all the way to 12,000. We're entering a 2.5-year bear market. Now we could be. One of the things that has me bullish is that so many people are saying that's what's happening here. And it's funny that, like, if you take a poll of the majority of like people with a video channel about crypto and listen to what they say and then do the opposite, you'll probably be right. So part of the reason I'm still bullish on this actually being quite bullish, not in the short term. Short term is going to be rough and rocky. But after maybe a couple months, is that so many people with influential channels are bearish. And so the market usually does what is least expected. And so I'm going with being bullish. Not that we can't break down below that line and then it looks even more bearish and then we're concerned. But I'm still remaining very optimistic, especially because so many people are bearish.
I think you make a very interesting point. I think what will happen is, whilst we're sort of being very cautious in the short term, which I think is a fair enough strategy right now, when it starts to rally, you'll see that the other channels perhaps, not that I look at them, of course, but some of the other channels might be saying, they might remain bearish when the market is looking like it's turned. I think that for me is the most fascinating part of the market, where you get this conflict between sentiment and what the price action is doing. And it's a perfect technical signal, because I like to see the market rally when sentiment is really bearish and everybody's telling me that it can't go any higher. And we will see that. So potentially, as the market starts to rally, the news might remain really bearish, but the price action will show us that it's turning. Now, it could be that it's going to turn because yields are going to drop. And we've talked about yields on the show a few times for this very reason. This is the 10-year government bond chart, and you can see how yields have been rallying towards this blue line, which was my target at 3.24%. Now, that is a major, major resistance level. See where it comes back to. November 2018. And to be fair, yields haven't turned around yet. They're still going up, but we've seen the first signs of a little bit of a pullback, but that's not really enough to change the trend. So 10-year yields, 2-year yields have gone over 3%, and even today they're pushing up again. So for these reasons, it does look like we're going to see more fear in the market, and so we should be braced as a strategy potentially for more downside, and that's in the stock market. That's in crypto, and more upside for the US dollar, which is on a tear. So even though this is potentially what some traders might say is overbought because of the RSI, if you remember last week, we talked about how it was trading near the high of the range. It's still going up, and there's still no technical sign to say that this is over. So we have to be very cautious that this phase is going to continue, because all of the main factors behind it, i.e. the rise of the dollar, the rise of yields, are all still in play. But at some point, there will be a flip, because there's no way the American economy can take higher interest rates, higher energy prices, and a higher US dollar all at the same time. It will cause a recession. I think the Fed will realize that. I know this is fundamentals, but they will realize that and then not raise interest rates as quickly. When the market gets wind of that, and it hasn't worked that out yet, but when it does, I think that will be the beginning of the reversal of the US dollar, and that's when the trend will turn. So those are the external signs I'm looking for, other than just general bullishness in the price action. But one other thing to look at is also, I mean, this is the chart of Ethereum against Bitcoin, which actually I just wanted to look at the Ethereum chart on its own. The Ethereum chart is relatively stronger. So we saw it in the spread, and you can also see it in the price action. It's not even broken its prior low from Jan 22. So, and it's had a fairly decent bounce, not enough to change the trend, but that's a good bounce. So there is some sort of cracks of the blue sky coming through that this is, you'd expect Bitcoin to hold an Ethereum potentially, because it was the second one, to maybe decline. I guess you could argue it both ways. Some people would say it's a superior technology, but holders of Bitcoin I tend to think of as long-term investors, and much harder to shift out of their positions, where I think of Ethereum as a more dynamic, perhaps shorter term, with more projects involved, although again you hear both sides of that too. But either way, it's still, relatively speaking, outperforming, which I think is a good sign. So even if Bitcoin breaks its relative low at 28,500, Ethereum is well off that. So it might be this has got to come down to this level at 1,728 for the low to be in, but it won't have even broken its low from last year if it does that.
Yeah, that makes sense. I wonder if part of the reason ETH is held up so strong is that so many people have sent their ETH to the ETH 2.0 contract, so it's non-withdrawable, and so it's not even a sellable position. And
yeah,
so,
I mean, that's an interesting point. I mean, it's a technical thing that guys like you know more about, and I can only just refer to it in the price action. But yeah, that makes sense.
probably we're seeing some of that in there, but it has held up strong comparatively. Thank you for sharing that chart. There's some other strong ones I want to look at today, if it's okay.
Yeah,
Can we take a
absolutely.
look at, I want to look at Cardano, and then I want to look at Luna. Luna has some fundamental things that are going bad for it. And some
Yeah.
people are calling the end of Luna. Probably, I hope it's not the end. I really like their algorithmic stablecoin, and I think I like the principles behind it, and I hope it holds up, but it is looking bad.
Yeah, well, starting off with Cardano, which has given us a bit of trouble on the way down. We had a few sort of attempts at a rally that failed, and I think we pointed it out a couple of weeks ago as being a little bit weaker than some of the other ones, and it's unfortunately it's been leading the way down, which is a bit annoying, because I agree that it's a really good project. The support here comes in at 0.4, so until it gets to 0.4, I think we've got to be cautious. That was a good breakout point for when the trend extended and rallied. So I'm looking at that as kind of like major support, which also comes back all the way to April 2018 as well. So
that's also a Fibonacci retracement level if you put the fib pattern on it, which is interesting.
Yeah. So if the two match together and there's natural support there, that kind of adds a bit more to, excuse me, the importance of that level. But we also need the market to show some form of, I think the best way to describe it is if you put your hand on a hot plate, you take it off really quickly. The same thing happens in the markets. When you hit a really good level, the market hits it and just goes straight up because it's so good. And that's what I'm looking for. I'm looking for that kickoff impulsive move that changes the trend. We also need to see this trend line break to the upside. So it needs to get through this, and it could do that with a consolidation, a sideways range, which might be what is about to happen now. But it has fallen, but it's compared to some, it's not fallen quite as far. So some of them are all the way down here on a relative basis. So it's still under a bit of pressure. I think, got to wait for the price action to show us some strength before we can step in there.
Yeah, I just wanted to share a fundamental thought behind this. So this is why I invest for periods of time. And I know a lot of people get nervous if you're new and you run into these kinds of things. And could it go very bad? It always could. It usually doesn't. Meaning, this is the reason I don't trade on leverage, because I got liquidated in an event like this. I lost 1.6 Bitcoin. And that was enough. I also was probably going to quit leverage trading anyway, because I had to watch the charts all the time. It made me too nervous. It disrupted too much of my life. And I literally, it increased my anxiety day to day so much. And so I've liked this longer term approach because it gives you the ability to be patient. So when things like this happen, you just roll with it and you're like, oh, okay, well, what money can I find to pick up more? I didn't expect prices would hit this low. Okay, great that they did. And I find that approach works really well. I mean, March of 2020, when Cardano went down to 1.7 cents, I couldn't find hardly any like SOFA money to throw in. That's when my long got liquidated, and it was a low leverage long, and it got liquidated. So I did have some money set aside for should things get cheaper, that I had to use that just to replace the Bitcoin that I lost, which was rough because I had that set aside looking for in case Cardano got cheaper. And I missed a chance to buy Cardano at 1.7 cents. And so these kind of pullbacks, though they're rough, this shakes out a lot of people and they leave the space. And that's why there's so much money to be made here, is because a lot of people get into here thinking there's only going to be green candles, and then they have some savage red candles, which happens. It happens every year or two this bad, like in crypto. So, and when it happens, a lot of people leave the space, but those who do find out, man, that was the bottom or near the bottom, or maybe it goes down double from here. But what's great is we're on a trajectory with crypto and a technology that's taking over the world. And a lot of these things, a year from now, 2 years from now, 5 years from now, 10 years from now, people will look back at the prices that people are dumping at now. Even if it does end up going lower, they'll look back and they will like beg and wish and pray that they could get at these prices. And so that's what keeps me in here, is that I know the technology curve that we're on. And even when we have days like this, it's like, oh, well, shoot, that went worse than I thought in the short term, but the medium and long term is still really strong.
Yeah, absolutely. So the situation you mentioned, Luna. I mean, Luna, the news there has been well documented, and we know what's happened there. But what's gone on in the price action? Well, for a start, I mean, this is not something that you would predict from this sort of price action. I would say, first of all, but second of all, I would also say it's not impossible. So one of the things that I've learned from the markets is that you never say never, because anything can happen. And that's also why week to week, when I talk about markets and how I try to approach them, I always think of a parachute level to get out, because I don't know that this is going to happen or whether it will or not. And I've seen this happen in other markets. I've seen this happen in many other markets just out of the blue, sometimes for no reason at all. So this is why I always try to think of where the exits are, just in case there's a problem. Now, having said that, on a build-up, whenever the market closes basically at a low, if it closes right at a low on a day bar, then just be very careful, especially if the volatility is increasing, which it is here. What you need for a turnaround is for the market to make a really strong low and then for it to bounce aggressively. Now, this could be what we're about to see here, because if we look at where the low's gone to, it's gone to 0.92.
What a risky pickup. Like I would pick up all day long.
Yeah. And you look at where that was, it was a similar level to the Cardano price action where I was looking at the same sort of support where it was the beginning of a breakout, a little triangle that saw the trend extend to the upside. That's exactly where it's gone from. Now, I'm not saying I would have done it, because I find I don't want to buy lows like this because I don't know where they are. I wait for the low to get in and then wait for the market to stabilize. Then to me, it's an opportunity to buy. So step one is, has the market panicked? Yes. Has it overshot? It looks like it has. Can it recover the majority of the bar and close near the high of that bar? So if it goes back up to around 13, it's a long way from 5, but still, we still really do need to see it much higher before we can say it's stabilized. And then the next phase would be something like an inverse head and shoulders or a pattern like that can happen from this sort of price action. It can also happen just from one bar as well. That's possible. That would be called a spike low. But what gives us a bit more time, and perhaps is more likely here, is that the market makes a base and goes sideways for a bit, makes a double bottom or some form of reversal pattern, then indicates that, the downward trend is over and it's going to go back up again. But in terms of pure price, I think we need it back over 14 before it's stable enough. And there will be many short-term traders punting in and out short-term, looking to buy and then sell out very quickly. So the volatility here is going to be absolutely massive. And in many ways, I think we need the news to calm down a little bit before I would think about getting in, because there's just too much focus on it. And there's too many people trying to sort of hit the market from both sides.
Yeah, and part of the reason there's such a huge price drop on Luna is Luna's actually went to the top 5 on the coin market cap and probably it was a lot in the spotlight for very long, right? And I took some profits out of Luna. There's a big lockup on withdrawing your Luna, and so I didn't take more profits, unfortunately, because the price was just recently $80, $90, $100. But at this price, it's really attractive for me to buy again. And what's going on is they have an algorithmic stable coin. And every algorithmic stable coin has failed so far in crypto because it eventually loses its peg and then it spirals. Now, UST, if we pull up that chart, and let me just pull it up, has lost its peg. And UST. Yeah, and so this is the big fear, is that it's lost its peg. Let me give it on an hourly basis. So right here, did a pretty good job holding the peg, dipped a little bit below, right close up to 99, and then it broke down. This is probably Do Kwon, who's the CEO or founder of Luna. He had 10, I don't know if he had accumulated 10 billion in reserves in Bitcoin yet to try to maintain the peg, but he had set aside billions in Bitcoin to try to maintain the peg. Problem is Bitcoin's price was falling too, right? And so then many people advised him just to let the peg fail and then restore it when there's not so much downward price pressure, which was probably a smart thing to do. And so it's fallen. It's trading right now at about 50 cents. I hope it doesn't fail, because one of the things I like about the stablecoin, and I hope it's able to be around, is USDC and USDT are somewhat centralized, meaning that if a government agency reaches out to the companies that run those and asks them to freeze all your UST or USDC, USDT or USDC, then they will freeze it, and you will not be able to move that money and not be able to spend it. It'll be frozen. And so is it really yours? It's like having it in your wallet with the ability of somebody else to just pull it right out of your wallet, whereas that isn't the case with UST. And so that's what I like about it. And yeah. It's kind of like having cash that, like, I don't know. Maybe you become a whistleblower on your government and you do the world a big favor, but your government then hates you. And then they reach out to the powers that be and say, freeze all their money. Well, it's nice to have some money that can't be frozen. Makes sense. Because you don't even have to be doing something wrong to sometimes get in trouble.
That's for sure. Yeah. So no, it's interesting that the story behind it. It's a difficult one, but we've seen it in the foreign exchange markets. So we've seen governments trying to hold these pegs, and sometimes it works and sometimes it doesn't. And the Hong Kong peg has held, and the Bank of England against the Deutschmark back in 1992. George Soros came in, and I know all of this might sound like ancient history, but it's interesting how things repeat in the markets. So if you want to look it up, there was the pound was being held against the Deutschmark at what the market thought was too high a level, and speculators started to sell, and it broke the peg. And then eventually it led to what was called Black Wednesday, but then it turned into what was called White Wednesday, because it allowed the economy to recover. And it turned out to be a good thing long term as opposed to a bad thing. I know this is slightly different in terms of the reasons for holding the peg, are for different reasons, but in market terms, they're very similar. So, so we shall see how well it recovers from here.
Yeah, I'm gonna guess that price at right around $1 per Luna was freaking incredible. That people look back and obviously, if Luna ends up failing and everybody loses faith in it, then that dollar is very, very expensive, and because it's a lot more than zero. But should Luna survive this, people will look at that dollar and they'll be like, "That was the window. Oh my gosh!" So.
Yeah, I mean, let's not forget there's more and more dollars being printed all the time. So, and that is the point of crypto in the first place, isn't it? So,
yeah, absolutely. All right, let's take a look at, with the market being down, I know there's tons of deals. We have limited time. I wanted to look at one I've been following for a long time, and that's Ecomi's token, OMI.
Yeah. So I have a feeling that this... I have to switch because it might not be updating on this one. No, it's not. Let's have a look.
Oh, is that out to the 11th of May? I think that's updated. Is it only?
No, it says the 5th.
Oh, it stopped updating since the 5th of May. That's interesting.
Yeah. So I think this happened last time. So let's try it here. No, that's the same.
That stopped on the 25th of March when they migrated.
Yeah.
Token.
Here we go.
Ecomi tether.
Yeah.
Yeah, that'll probably show.
That'll show it. Okay. So
there we go.
Yeah, I just need to change the... Yeah, put that on the default. Yeah, so look, I mean, again, this is heading towards sort of massive support down here, which was it was only the low of last year. It was down here last year. It moved in a nice upward trend. There was this reversal that we looked at, which was great. It went sideways here, and we were looking for a breakout at the high. Got very close to it, didn't quite happen. Traded in this what's called a rectangular constriction, and broke the low. And this is the trend that we've been following down. It's still in this trend, but it's approaching some major support. So, I would like to see how it trades just ahead of this 0.0011 level, because I would guess that there's a lot of people watching that who want to step in and speculate and have a go at it. So if they do, then I would wait for that stability to come in before I personally would step in. I think I've got a very small holding of this. I haven't even looked at it because for me, I'm just thinking very long term. So I'm not even just looking at it, day to day or even week to week. And I know we're in a corrective phase, broadly speaking. So of course it's going to go down, but I'm waiting to have an increase in some positions. I just want to wait for the stability to come in, and we haven't seen that quite yet, so I'm going to have to wait. But we are approaching this major support level, so I'd really like to see how it trades around there.
Yeah. I know the price is so attractive, and I have been scooping this up on the way down as it's hovered around the 0.2 cents mark and below, and probably pick up some more. I don't have a lot in stable coins though. That's a hard thing, is what's still up that I can sell or harvest in order to get more of this. Like, what do I have that's dropped less so I can buy more of this? And there might be a few things I can. So
yeah, absolutely. I mean, it's I'm excited about the technology because I've heard you talk about it, and I think it's things like this you have to remember the words of Warren Buffett, who said that he'd like to own things that he would be happy to own, even if the market was closed. And that's why it's really important to think about the actual underlying sort of projects. And if they're good, they'll remain good. It just takes a while for sentiment to turn.
yeah, absolutely. And that's Ecomi is one of my favorites. All right. Very biased towards it. I own a lot. I love it. The collectibles, I think they're doing a fantastic job with their collectibles. So I like what the company is doing. So I like their token. Let's see. Any other ones we want to look at? Let's take a look at Immutable X. I am looking for a good re-entry point on this, and I haven't re-entered yet. And I'm still just a little bit concerned about their vesting schedule, that as much as it's dumped and the price is really attractive for me to get some, I'm just watching it still and not ready to jump in yet.
Yeah. So this is the
Yes.
chart. Yeah. So it's managed to break its prior low, which is not a good sign for the moment. That's one downside point. Another positive sign that is kind of the balance to it is that we're trading near psychological levels. So, when the market hits one or just below $1, you'll see people step in because these levels are where people react. If you drop something into a sale by 50%, people step in because they see it's half price. And I know it may sound strange that people would just buy it because it's on $1 as opposed to, or just below $1, but that's how people react. And that's kind of what they've done here. I know it was a bit of a spike down, but it's currently over $1, and it's reacting to that. Now, the overall trend is still down. So again, we've got to be a bit more cautious about buying for the long term, but the short term players are definitely having a go at this. So I'd like to see, again, a bit more of a consolidation and potentially a reversal pattern. If by the end of the week it's closed back up at 115, I think that would be a good sign, because this price action here would then look a bit like a spike. And a spike is when the market drops really aggressively, hits a level that shows that people have panicked, and then closes right back up near where it started. And then the next day you'd see a big impulsive move to the upside that kind of reverses it and says, yeah, actually people are, viewing this as a big buying opportunity. So there's a couple of steps it needs to take before I could get in, but I'll have I'm trying to look for long-term levels. There's nothing behind here that can tell me where there might be support, which is why we have to look at the psychological levels.
Yeah, what it doesn't show on that chart is that it launched last year, and their public sale price, from what I could find, was 15 cents. And I think they probably had a private sale price of 10 cents. And so we're still way above that. So those that got in the private sale and the public sale did exceptionally well. But oftentimes, because of vesting pressures, is as these continue to vest, those people are still way up and they tend to sell. I'm just continuing to watch this, just hoping, because I really like this one long term. There's some game blockchains. There's a lot of NFT projects that are moving over to Immutable X. The marketplace on it is really good. I just think there's a strong future here. I just think the vesting pressure is going to continue, or I guess I'm hoping the vesting pressure continues to push this down so that maybe I can get in on a multiple of what the ICO price is. Like maybe I can get in some at 30 cents and then some at maybe, if really lucky, it ever does come down to the ICO price, because long term I like this. And I don't know that it'll quite get down to the ICO price, but I'm just watching the vesting pressure. Yeah, I'd love to get my hands on the vesting schedule so I could understand exactly when the vesting is happening and when it stops and how much is coming out. But I really like this project. I'm just looking for a good entry point. I did have some that I got because I held some of the original Gods Unchained cards, and Gods Unchained was backed by Coinbase, and Gods Unchained is the one that built the IMX platform so that they could move off of Ethereum onto their own side chain. And then they've garnered a lot of attention towards other projects, including Ecomi, bringing over their collectibles onto the Immutable X blockchain. And so I really like this one. I'm just waiting for a great entry point, because long term, I think this one does exceptionally well. Short term, I think there's more pain coming.
Yeah.
And maybe that's wishful thinking on my part.
Yeah, I mean, it's from a technical point of view, I can't step in here. It's not clear enough, but there are a couple of things to suggest that there is some buying going on, and you can see it. You can see this sharp move and how it's rallied as it's dipped below $1. So we just need it to sort of stabilize a bit more. I mean, it can do that and then continue down. So we just have to wait, really. That's sometimes that's the hardest thing to do.
I know it is hard, and I end up usually, when it's going down, I usually end up buying some early, and then I buy some more, which still ends up being early, and I almost always miss the very bottom, and that's okay. It works out really good because you end up having bought pretty darn cheap, not extremely cheap, just pretty darn cheap. Pretty darn cheap is often good enough.
Yeah, the time frames are one of the most important things that any investor or trader needs to work out for themselves as to what sort of trader are they. Are they a long-term trader? I remember talking to a guy who I used to work with a long time ago, and he said, I've got this money and I want to invest it in the stock market and I want to put it in for the long term. I was like, okay, that's really interesting. And then a month later, the stock market was tanking. And he said, oh, I'm pulling everything out. And I said, well, hang on a minute. Didn't you say you were buying for the long term? He said, yeah, but I'm getting out now. And I was thinking, well, that's not what you said you were going to do. And look, I'm not telling him whether he should get in and out of something, but it's interesting how the psychology changed. I know that's what makes trading so hard. I'm not saying it's easy, and I don't blame him for feeling like that, but it's also important to have your own time frame in mind. Are you a long-term investor? Are you a short-term investor? You're going to get in and out, very short-term intraday or week to week. All those things are different. Everybody's different. They've got different risk profiles, etc. So it's important to know what you are as a trader.
Yeah, and we have a song that we play a little bit at the beginning and at the end. I had it specifically. I wrote it. And then I had Charlie from the UK actually record it. He did a phenomenal job on the rap. It's awesome. And it just reinforces the principles that I use, right? And the thinking. And what's funny is, like, a lot of this comes from the 20 years experience I had prior to crypto. That when I moved in the crypto space, I wondered if it applied very much. And I doubted that it applied very much. And I found out it does apply very much to the crypto space. Just crypto does have more accelerated cycles, like real estate from top to top or bottom to bottom is sometimes 20 years in between, whereas crypto can be 4 years in between, from market top to market top, or market bottom to market bottom. So it's a very accelerated cycle, and I like that accelerated cycle. It also has really high volatility, as we're seeing today, and I really like that really high volatility. Because where else can you go 20x in real estate? If you're buying a house, is it going to 20x? No, not really. I mean, maybe over 100 years, maybe over less, maybe 50 years. But And that's if you buy very, very well. Now, if you trade on with leverage on real estate and you put, say, 10% down, you get a mortgage and you have the renter pay the mortgage, then you might be able to get a 20x over a long period of time. But then there's property management and other things. So the amount of money that can be made here through long-term thinking and sound fundamentals or sound technicals is absolutely incredible. And that's what I like in this space. And you're going to run into days like this. And part of the reason there's so much money in this space is because so many people panic sell out when there's days like this, because they haven't set proper expectations for themselves. They say, like Paul was just describing, I mean, how many people in the crypto space have we seen do that? And it's because, number one, they're either trading with money they can't afford to lose. So as it starts going down, they start to worry, panic, and they panic sell out because it just keeps getting smaller and they're worried it's going to go to zero. Or number two, they just had set up improper expectations, thinking there wouldn't be days like this. And there are, and there will be more of them. And so that's why I started this idea of, commit to a 5-year plan, 5 years at least of being here, because that gives you enough time to go through at least one full market cycle, if not maybe 1.5. And if I'm correct and we still have a major leg up in this bull cycle, then we'll probably have a correction after that. And then you might get one more major up, or part of it, a major up in that total of 5 years. And it's a great position to be in. It helps you have long-term thinking so that when things like this happen, you're less tempted to sell and you're more tempted to buy, which when everybody's selling, a smart contrarian buys. And then when everyone's buying, that's when you know to start selling, right? And it's amazing how well those principles work out over time.
Yeah. And it's, as you said, buying with money you can afford to lose, because the point of it is, if you feel uncomfortable, it's because your leverage might be too big, or something's happened that you haven't taken into account for with your strategy. So having a long-term strategy means, you're expecting things to turn around from a big picture point of view, but that also takes into account that the market can go down in the short term. But it's not easy. That's why so few people are successful at trading. So, the rules are simple, but actually maintaining them are very, very hard. And everybody knows that. And if you're finding it hard, then, that's just part of the learning process that everybody's been through. And although it might sound really great to just sort of buy in and make loads of money, who wouldn't want that to happen? But at some point, the market will turn, and all the people who were buying during the dot-com boom, who experienced exactly that, they thought they got the goose that lays the golden egg. When the market turned, they didn't know what to do. When we had this massive reversal where everything, completely got annihilated, because there was really too much speculation at that time. There was, people buying companies that they just had no idea or understanding. I know there's some of that is happening in crypto as well, because it happens in all markets, but it was happening on a massive scale, where teachers and, doctors and cab drivers were all quitting their jobs just to play the stock market. And if they just see the market going up, then they don't know what to do when the market goes down. And part of a good strategy is to understand that it does go down and what to do, and how to protect yourself.
Yeah, agreed. Well, thanks for joining us on this day, Paul. I'm sure the audience loved hearing your take. I know I personally did. For those that are thinking about the crypto space and what the future looks like, if you haven't already subscribed to this channel, why not subscribe? We do take a different approach here than most of what you see everywhere else. My background is a lot of investment for 25 years. I did go to business school. I did work for a business consulting firm. All of that kind of helped shape my views. And really, it came from growing up pretty poor and thinking, man, I don't want to be poor the rest of my life, because money, though it doesn't make you happy, it does give you options. And if you don't have money, you don't have options. But you can only make so much with your own time. The way you make a lot of money is learning how to work hard, make some money, and then make that money work for you. So that's what drove me to investment. And that's why I'm so passionate about investment. And I really love the crypto space. It's an area where this technology will change the world. And so I have this window of time to benefit from that by investing and catching that wave, being patient through times like this. If I can, buy more, and then take profits when I'm way up. It's as simple as that. Though it is simple, isn't always easy, as you're probably feeling now. Thanks so much for joining us. Remember, no rain, no gain. We're going to go ahead and play the full Rainmaker song for all of you. We'll see you later.
Came into the space, chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit bad before you good. It was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I take the one out cause I'm patient like that. And I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't lead with my heart. The principles are simple, they're leaving a mark. Why when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Make the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy but with knowledge to gain show. Sticking out this road, cause soon will come a bear market. Learning and growing, and when it's slow will be the target. They say it's come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort, cause here comes the rain. So let's go rainmakers, let's make it all happen. They go with the hate, say the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes the time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough. And that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love. And I follow what I learn, not relying on luck.